France, a symbol of cultural heritage and European strength, now faces its greatest economic challenge in decades. The economy is crumbling under the weight of soaring debt, mass protests, and energy crises. Yet, amidst the chaos, whispers of a solution emerge: a deepening trade relationship with China. But can this partnership truly save France's economy? Or are the risks too great? France's economic crisis stems from a culmination of systemic issues and recent shocks. Over the years, public debt has climbed relentlessly, now surpassing 3 trillion euros, 112% of GDP, according to a 2024 IMF report. Structural inefficiencies, such as rigid labor laws and an over-reliance on public spending, have stifled growth, leaving the economy vulnerable to external shocks. The COVID-19 pandemic exacerbated these problems, as prolonged lockdowns wiped out small businesses and strained public finances. Recovery post-pandemic was sluggish. GDP growth lingered at 0.4% in 2023, while inflation soared to 6.1%, crippling household purchasing power. Nobel economist Thomas Piketty attributes this stagnation to decades of policy mismanagement and insufficient investment in technology and infrastructure. Compounding these issues was the energy price surge triggered by the Russia-Ukraine war. As sanctions against Russia disrupted gas flows, energy costs in France skyrocketed by over 40%, according to Eurostat. But what role did energy dependence play in this economic unraveling? Please like and subscribe. Leave your thoughts in the comments. Your support helps us grow. Thank you. France's reliance on energy imports has been a critical weak point. While the country's nuclear program once made it a leader in energy independence, years of underinvestment and maintenance delays have left nearly half of its reactors offline. This forced France to turn to energy imports, particularly from neighboring countries like Germany, at exorbitant costs. Natural gas prices, which surged after Russia's invasion of Ukraine, further strained the economy. The average household saw energy bills rise by 50% from 2021 to 2023, according to France's Energy Regulatory Commission. French businesses, from manufacturing to agriculture, faced steep operational costs, reducing competitiveness in global markets. President Emmanuel Macron's push toward renewable energy, wind and solar, has been commendable but insufficient to cover short-term gaps. Critics argue that delays in rolling out green projects have left France vulnerable to global energy price volatility. As energy costs climbed, so did public dissatisfaction, culminating in widespread labor unrest. In 2023, France witnessed over 2,000 strikes, paralyzing sectors like transportation, education, and healthcare. These strikes were fueled by anger over the government's controversial pension reforms, which raised the retirement age from 62 to 64. The financial impact of these protests has been enormous. The French Ministry of Finance estimates that strikes cost the economy 12 billion euros in 2023 alone, with disruptions delaying exports and scaring off tourists. For instance, Paris hotels reported a 25% drop in bookings during peak protest months. But these strikes aren't just about pensions. They reflect deeper frustrations over inflation, stagnant wages, and a growing wealth gap. Labor union leader Philippe Martinez captured the sentiment, saying workers feel abandoned while the wealthy continue to profit. Amidst this turmoil, France's reliance on global trade is being tested. Trade has always been a cornerstone of France's economy, with key industries like aerospace, agriculture, and luxury goods dominating global markets. Yet, disruptions in global trade over the past 3 years have taken a toll. In 2023, French wine exports to the US and China fell by 15% due to rising tariffs and declining demand. Airbus, a leading exporter, faced production delays stemming from supply chain bottlenecks and shortages of critical components like semiconductors. Meanwhile, France's trade deficit hit a record $164 billion as imports, particularly of energy and manufactured goods, outpaced exports. This growing imbalance underscores the urgency for France to strengthen trade ties with partners like China. But is China the right partner? China, as the world's second-largest economy, presents immense opportunities for France. In 2023, bilateral trade between the two nations totaled $60 billion, with French luxury brands like Chanel and Hermès finding a lucrative market among China's growing middle class. By deepening ties, France could benefit from affordable Chinese imports, easing inflationary pressures. Additionally, infrastructure investments through China's Belt and Road Initiative could revitalize France's aging transport networks. Former Prime Minister Jean-Pierre Raffarin described China as a key partner for sustaining economic resilience. However, critics warn that such a partnership is not without risks. The risks of closer ties with China extend beyond economics. Critics argue that deepening dependency could expose France to geopolitical leverage by Beijing. The European Council on Foreign Relations has flagged instances where China used its economic influence to push political agendas in countries like Sri Lanka and Greece. French manufacturers are also concerned about competition from cheaper Chinese imports, which could threaten domestic industries. The French Federation of Industrialists has warned that over-reliance on Chinese goods could lead to factory closures and job losses. Finally, there's the risk of alienating allies. France's pivot to China could strain its relationships with the US and the EU, both of which remain wary of Beijing's ambitions. How does the EU factor into these decisions? As a leading member of the EU, France cannot make unilateral decisions without considering the broader bloc's policies. The EU has adopted a cautious stance toward China, implementing measures like the Carbon Border Adjustment Mechanism to protect European industries from unfair competition. Germany, France's closest ally within the EU, has also maintained a balanced yet skeptical relationship with Beijing. If France's pivot is seen as undermining EU unity, it could weaken the bloc's collective bargaining power. However, France could use its leadership role to shape EU-China relations, advocating for a united yet pragmatic approach. But can France balance this act without jeopardizing its geopolitical alliances? France's balancing act is delicate. While it seeks economic relief from China, it must also navigate its commitments to NATO, and the US President Macron has emphasized the importance of strategic autonomy, a doctrine aimed at reducing dependence on any single global power. However, the US views China as a strategic rival, and any deepening of France-China ties could provoke tensions within NATO. Harvard's Graham Allison suggests that France must position itself as a mediator, leveraging relationships with both powers to foster dialogue. But is this balancing act sustainable? History offers some lessons. Several nations have turned to China for economic support during crises. Australia, for instance, relied on Chinese demand for raw materials during the 2008 financial crisis, boosting its mining sector. Similarly, Italy joined China's Belt and Road Initiative in 2019, hoping to rejuvenate its infrastructure. Yet, the outcomes vary. While Australia thrived, Italy's experience has been mixed, with limited economic gains and criticism from the EU. France must weigh these lessons carefully to avoid repeating past mistakes. The implications for French citizens are profound. For the average French citizen, a stronger trade relationship with China could mean cheaper consumer goods, from electronics to clothing. However, this comes at a potential cost to local businesses, which may struggle to compete with low-cost Chinese imports. On the positive side, increased exports of French agricultural products, like wine and cheese, could boost rural economies. According to the French Chamber of Commerce, expanding exports to China could generate €5 billion annually, supporting thousands of jobs. But what does this mean for global trade dynamics? A France-China alliance would ripple across global markets, challenging US-led trade systems and potentially weakening the dollar's dominance in global transactions. If other EU nations follow France's lead, this could bolster the yuan's role in international trade. However, such a shift risks deepening the divide between the West and China, escalating tensions in an already polarized world economy. Can France navigate these complexities while addressing its domestic challenges? Trade with China offers a lifeline, but is not a panacea. High public debt, structural inefficiencies, and social unrest require comprehensive reforms beyond trade. As Joseph Stiglitz aptly notes, trade can support growth, but it cannot substitute for domestic policy reforms. France faces a choice. Prioritize short-term relief through trade, or commit to long-term structural changes. Either path will reshape not only its economy, but also its role on the global stage. France's crisis is far from over. Will it choose short-term gains through trade with China or embark on painful but necessary reforms? The stakes extend far beyond its borders, reshaping Europe's future. Let us know your thoughts in the comments. Can trade truly save France's economy? We're glad you're enjoying this video. Please like and subscribe. Check out another video that is now on your screen.